Good morning. Welcome to Bazaar Morning Call. I'm Sonia, Shenoy, and with me is Nigel as well as Latha, Venkatesh. Well, we get back to trade after a holiday yesterday, and the Nifty actually snapped its 7-day gaining streak day before yesterday. And this morning, the cues are not that great in the sense global markets are a bit under pressure. Oil has gone up 3%, and it's an important day because you do have the F&O expiry as well. So we'll talk about all of that in greater detail. But for now, the SGX Nifty adjusted is indicating that not too much may change. We may still be in that very narrow trading range. And an up move today, a green tick is what it's suggesting. But globally, things have looked a bit sticky, especially as far as the technology stocks are concerned.
Only that. Sonia, good morning, and good morning to everybody, to you as well, Nigel.
Morning.
My bet is that from, I think, October 13, there is a huge rally in the market. A downside has been put because of the action of central bankers. Now, I'll just, I'm not saying my views. Look at how the market has behaved. I've got something called the bets of rate hike, which there is a group called the CME Fed Watch tool, which measures broker bets on rate hikes. Now, just look at the November rate hike bets from the FOMC meet, which is November 1st and 2nd. A 75 basis point rate hike the bets have fallen from 93.8 last week to 90.5 currently. And the bets of a 50 basis hike has slightly increased. Nobody is expecting a 50 basis, but just look at the marginal increase. Yeah. This is not the most important part because this 75 basis is a given. Look at the December bets, and that is what the market is really reacting to. 75 basis point hike was absolutely, next to, was as high as 81% last week. And that bets of a 75 basis in December has fallen to 35. 50 basis hike, the bets were only 18% because everybody was expecting 75 in December as well. Now the bets of a 50 have gone to nearly 60%. So market basically is pivoted. Whether the Fed is pivoted or not, market is pivoted to a Fed slowdown in the pace of rate hikes. Yeah. Now, the best evidence of this, or increasing evidence of this is Canada. Canada Central Bank yesterday was widely expected to give a 75 basis hike. They gave only 50. The aggression of the rate hike cycle also was started by Canada. They surprised everyone 6 months back, and now they're surprising on the downside. My bet would be the UK BOE and the UK government resigning because the bond market could not withstand that much of rate hikes is a sure short reason why all central banks have realized that yes, you have to raise rates to kill inflation, but you can't kill financial stability. You have to do it slowly so that the financial markets are able to take. That, for me, is the biggest bet that the market is moving on. From October 13 is a near, all markets, ours, the Wall Street indices, all of them are showing a gentle, the bottom has clearly been protected for now. And my sense is that, the next time people will veer back to, oh no, the Fed may hike more than we think, will happen only if the jobs data is ultra strong or the US CPI numbers come in ultra strong. All those are at least 2-3 weeks away. Okay. So for the moment, I think the rally is safe till at least November 5th.
And in that context, right, the SGX Nifty, if you adjust for the rates, yesterday since we were shut, it's up 240 points right now. So a big gap up opening is what perhaps is coming. Only niggling worry, right now the SGX Nifty I think is at 17,894 and the Nifty futures close was 17,654. So a big up move is what, the SGX is suggesting for now. The only thing is across the globe, the IT numbers in the US were a bit disappointing. So that could have maybe a rub-off impact on our own IT index, you never know. But it didn't look good across the board. Facebook was down about 18%. Alphabet, the revenue slowed down quite a bit, just a 6% growth versus 41% growth a year earlier. And Alphabet says that they will significantly decrease their headcount growth. So there is, one piece which is not working for sure, which is the tech piece over there. All eyes will, of course, be on the data in the sense there's the weekly initial jobless claims, there's the September durable goods orders, but that's about what's happening in the US. In our own markets, it's been all guns blazing. In this series so far, the Nifty is up 900 points and the bulls have had a very, very firm grip on the market. There's a strong support at the 50-day moving average, which is 17,500. And so far, this market has been trading in a 300-point band between 17,500 and 17,800. Today, we may get to the upper end of the band as the SGX is suggesting, but let's see whether we find any resistance there or whether we, conquer that level. But for now, I mean, the bulls have it firm, the grip, they've tightened it, and looks like that's something that can continue.
Well, that's right. Sonia, it's going to be a tricky start actually because the Nifty is going to catch up with the global cues as you mentioned, and adjusted, we're likely to see a 200-250 point bump up. That's going to be tricky for the bulls because you're getting a good gap up, maybe taking some money off the table may not be such a bad thing. The dollar index at around 110, for me, that's one of the biggest positives. The only problem is that's partly offset because crude was moving towards around $90 per barrel. That's perked up yet again, moved to around that $95 per barrel odd mark. It's monthly expiry, so things will get volatile in the second half of trade, but it's been a very, very good series, as the numbers indicate, both on the Nifty and the Nifty Bank. The uptrend will be intact till the 50 DMA is held out in the near term. That's around 17,500. What's been impressive for the last few days, and the reason the Nifty has moved higher, is the institution number. That's the FI and the DI number put it together. We have a net inflow that's been coming in, close to 800 or 900 crores odd for 7 straight sessions, and I like that. What are the FIs doing in the FNO market though? The short positioning has come down. It was at around 85% a couple of weeks back. That's come down to around 66%, though they continue to remain net short. The 17,800, 17,850 odd mark could be a bit of a resistance, and I say that because the FIs wrote calls yet again, after a while, close to 25,000 contracts. And on the 17,700, 17,800 calls, close to around 40 lakh shares were added out there. So some signs of writing out there. How do you approach trade then? The Nifty is likely to open up near the resistance zone. I would think that taking some money off the table would be pretty good news because you'll get a bit of an intraday dip. Sustaining over the 17,850, that's going to be crucial. And if you see those calls that were written, they start getting unwinded, then we are headed towards that 18,000 odd mark. So keep an eye out on the highs of the day the last couple of days. The 50 DMA crucial on the downside, and the Nifty Bank didn't participate on Tuesday. Let's see whether or not it gets back to its winning ways. For starters, SGX Nifty is indicating a big gap up.
Okay, thanks for that, Nigel. That's even more